Well, Renaissance Asset Managers was founded in 2003 and has assets under management of $2.8 billion across a full range of asset classes. Joining us in studio to discuss the group's investment strategy, Sven Richter, Managing Director of Frontier Markets at Renaissance Asset Management. Sven, thanks very much for your time.
Thank you.
Let's start with FDI flows, foreign direct investment. What's happening? What are the trends? And what are we seeing deployed into Africa at the moment?
Well, I mean, we've been seeing it move up over the past few years. What I think is interesting, though, in 2011, we've seen that it's reached the peak levels that it reached in 2008. Obviously, 2009, after the financial crisis, it came down a bit, but it's recovered nicely. And what also I quite like about it is it's not just in the mining sector. You know, people think it's only in primary sector. We've also seen it deployed into services and manufacturing as well.
In terms of Ashraf, where do you think we should be investing our money? Is Africa a big play when it comes to Ascension?
Look, from a property perspective, what we're doing right now is focusing on South Africa. This is where we're seeing lots of opportunities, especially within the office property market, which is very depressed at the moment. So buying properties at low yields and also fairly low rentals, and we see upside over the next 5 years. But, you know, speaking of property in Africa, there are lots of developments going on, but unfortunately it doesn't come without investment into the likes of electricity and road transport, etc. And that sort of FDI investment, especially if one looks at East Africa, you know, Nairobi's become the center of East Africa, especially with the development in South Sudan, as well as Tanzania, Uganda, Rwanda, all going through very, very fast growth. I mean, you're talking Rwanda was about 8.5% last year.
I mean, most of the sub-Saharan African countries are growing at about 5 or 6% as a baseline, and then there are some that are doing more. What's interesting is that, and there are many opportunities in South Africa, so I'm not arguing that there aren't, and they're very attractive. But the investors who put in their money into Africa, the reason why it's building up again into sub-Saharan Africa is because the returns that they are getting in Asia is about 14-15%, in Latin America about 14-15%, and in Africa they're getting 20%. So that's attractive.
What about inflation as a problem? You look at the Ghanaian economy, for example, good growth rate, but we're seeing an enormous threat of high levels of inflation coming through.
Yes, I mean, we've seen it. Look, inflation tends to be moderating a bit in most of these countries. You know, I just saw a report, Tanzania, it's starting to come down a bit. We think in Kenya it's coming down a bit. Ghana is sort of still sitting up there. And not to say that they are low figures, they're in the 20% or so. So inflation is a threat. When we talk, though, about these returns, we're talking about US dollar adjusted returns. So this is after inflation. So it is still attractive. But you do need to pick your entry point, because you have to be careful of inflation and be careful of currencies as well.
Yeah, the other thing that really concerns me about all these frontier markets is that the growth is inhibited by, as I mentioned, lack of electricity, transport nodes, etc. Do you see that being rectified over the next 2 to 3 years? You know, is government really putting plans into action?
I mean, you mentioned Kenya. If you go to Kenya, you know, they have the north road that they're building around Nairobi, the south road they're building around Nairobi as well. As you drive through, you see more and more overpasses. So you just see the infrastructure just in Nairobi itself coming through. But we actually think that this infrastructure that is lacking in the rest of Africa is exactly what's boosting that growth. Because when you're in a very developed market, you put a little bit of money into sort of infrastructure, and you don't get that much return. You get some return, but you've already got such a good infrastructure that it doesn't leapfrog you anywhere. Whereas you put a bit of money into infrastructure in Africa, it leapfrogs you to the next level of efficiency, and that actually is what drives the growth.
What do you say to those detractors of the Africa story? Some of our viewers push back and say, listen, we're not interested in the West African or the East African story because those markets are so illiquid. Are they just really behind the game? Should they be paying note? Are they going to be left behind if they don't invest now?
Yes, I think they'll be left behind if they don't invest. However, we are not saying that you should put all your cash into any one market anywhere in the world. I mean, we are proponents of invest in emerging markets. We think emerging markets are great. And as a subcomponent of emerging markets, we like Africa a lot as well. So we think that all investors should have some of their portfolio in Africa. Not their whole portfolio, because investment is not about putting all your money in one place. I think that if people don't go into Africa, they stand a chance of being left behind. Liquidity is something you have to manage. You have to be very careful with liquidity, and it's something we look after very, very carefully. But one of the attractions about Africa is that it marches to a slightly different drumbeat to the rest of the world. So you get this diversification of returns if you're in Africa, which you don't necessarily get in the rest of the world. Unless there's a financial crisis. I know you're going to tell me.
No, I wasn't going there.
You do have things when there's a really big transformation in the world. You do have everything sort of moving to correlation closer to one. But Africa still tends to survive without going into a recession. I mean, in 2008, it did not go into recession. It carried on powering ahead.
My comment was going to be more around liquidity. A lot of the African mining businesses have actually listed in London, Toronto, and some in Australia, just because those markets are considered more liquid. I mean, JSE offered South Africa as the base, and it wasn't that attractive. We saw it through 2006, 7, and 8. They preferred to take it offshore. Do you see some of the bigger African companies, and I'm thinking something like KenGen, saying we need to do a capital raising, we've got a lot of infrastructure spend, let's go to London or Hong Kong because there's liquidity and they'll give us better prices?
Yes, I think, pricing you don't know, but there is more liquidity. There's more pools of capital, and certain markets, like for instance the Canadian markets, have developed an expertise in mining, so miners tend to go there because the analysts understand it, they know how to take on the risk, and they move ahead with it.
So directly onto the Toronto
yes, directly
exchange.
into Toronto, and other companies list in London, and some others list in various other places in the world, and some of the investments that you can make into Africa are listed here in South Africa. For instance, MTN is really a play on African growth these days. But we, in our investments, we don't preclude companies that are listed outside of Africa. We look for all companies who are going to benefit from the growth within Africa. So we will happily buy in London, but we'll also buy in Kenya and in Nigeria, and we'll buy in South Africa looking for that growth in Africa, because it's where the company operates.
So, I mean, given your background as a fund manager in emerging markets for the last, was it 15 years, if I recall correctly, what is it that you look for in a company before you invest in it? I mean, liquidity aside, because African liquidity
is something you control as you make your investment. Okay, what we want firstly is a quality company. We want companies with good, defensible businesses where the management know what they're doing, where the management is running a good company, where the product is wanted by its customers and they can afford to pay for it. So when it's a very good quality company, we then look at the risk. We want low debt. We want low risk in terms of the business operations, and then we want to buy it when it's cheap. So it's really quality, risk, and value are our key theme in buying all the companies.
When you look at East Africa versus West Africa, and we can look at the regional plays, obviously the exciting hotspot, as far as we are hearing regularly on the ground, is in your West African play. Is it true to say that East Africa is relatively saturated from a growth perspective?
No, we don't agree with that. I mean, yes, West Africa is exciting. You've got oil in Ghana, you've got sort of oil in Nigeria, you've got 160 million people in Nigeria. But when we turn around and look at East Africa, we don't think of Kenya as an individual country. I think the point was made earlier that Kenya is really a hub for the area. Kenya, we think of as having sort of 120 million people. Now, not in Kenya, but when we add Rwanda, Uganda, South Sudan, yes, it does. And so much of what's going to happen there is moving through Kenya. And not to say Kenya doesn't have its own opportunities as well, just its industry that it has. Plus, they've discovered oil in Kenya. They're discovering oil in Tanzania. So, even those countries are now having their own oil finds and their own opportunities from resources like oil.
The other thing is that Kenya also offers the opportunity that from Mombasa port, you can take fresh fruit straight into Asia in less than half the time that it would from West Africa. So
absolutely,
that's the other opportunity in terms of East Africa.
And they're a very strong regional play. Rwanda, you mentioned, I know that it's the third best place to do business on the African continent, according to a competitiveness report out from the World Economic Forum. And they've made use of that East African community. The Northern Corridor links them through to the Mombasa port that you're talking about. Exactly. Great growth rates, 7 to 8% we're seeing out of Rwanda.
And there's also a new port further north of Mombasa that is going to be built as well, and there's going to be an oil pipeline through from South Sudan. So all of those things are very, very attractive. And one of the things where Africa has done very well is in horticulture. Both the vegetables being shipped out, but also a lot of stuff flown to Europe. I mean, if you are a European and you go buy a rose, there's a very good chance it was grown somewhere in Africa. Or if you go and buy a nice little vegetable, probably in Kenya, actually.
You say that the largest producer of roses in the world is based in Zambia, 10 kilometers from the airport in Luanda.
Well, there we go.
Yeah.
It's
Horticulture, big business on the African continent.
Absolutely.
Oil and gas.
Yes.
Two big areas exploding right now. All I've got to throw at you is Mozambique and say, how can people take advantage of the investment opportunity or the growth opportunity that we could potentially see in that space?
A lot of what you have to, because of liquidity and because Mozambique doesn't really have a stock market, a lot of what you have to look for in terms of taking advantage of it is looking for companies that are doing business in Mozambique. So companies that might be operating a cell phone network in Mozambique that are listed somewhere else, companies that do logistics in Mozambique, and then also the companies that will be listed offshore, as you said, in places like Canada or London that actually operate in the oil industry in those countries as well.
Are you looking at Mozambique? You still
Well,
see
no,
lots of opportunities in South Africa?
we really see the opportunities in South Africa right now. There've been, there's been a move outside of the CBDs. We're moving effectively back into the CBDs. Government being our biggest tenant, they now 68% of our tenancy, and we're saying, government in South Africa is growing, so we'll fill the space.
Well, let's chat 10 years from now. Let's see where you stand on ignoring the African story. If we go back to oil, actually not oil, gas and
Yes.
Mozambique, in terms of what it will do for the economy, isn't that something we should take into account? That Mozambique now with these discoveries will be catapulted into a new growth phase? It
will be catapulted in a growth phase, and with this gas that they have, there's energy available. So then people start looking to see what they can do with it. Can they possibly bring an aluminium smelter there because they have to have energy? Can they do something else with this energy? So it does catapult it, and it creates these opportunities. And you don't always know exactly where the opportunities are going, because on the desks of hundreds of companies throughout the world, people are looking at these opportunities. Some will go ahead, some won't go ahead. We know that there's an opportunity, we know it will go ahead, and we need to position ourselves around it to take advantage of it.
The regional power pools, those also a big theme on the African continent at the moment, and perhaps one of the biggest risks of investing on the African continent, having traveled extensively myself, are the regular blackouts and what that does to industry. Do you think we're moving now to infrastructure solutions in these regional plays that are going to really supersede any risk on that front?
Well, I don't think you can use the word supersede any risk. I mean, any investment you make anywhere in the world, there's a certain amount of risk. Okay, so but the biggest risk that you have is not doing anything with your money either. So you have to make a decision as to where you're going to invest. I do think the risk is reducing all the time. I think we are seeing more electricity come out. I don't think it's going to turn around quickly. It's going to take some time to turn around, but there are opportunities. When we look at the legislation in places like Nigeria, when we look at just what's happening here in South Africa in terms of new plants coming online, we see this risk reducing across the continent, but it won't go away quickly. But sometimes to buy in when there's still some risk being seen by other people is actually when you make your most money.